This is the L2 Capital Podcast with hedge fund manager Marcelo López. The L2 Capital Podcast focuses on potential opportunities in the market and brings to your industry leaders and an intelligent conversation about their respective areas of expertise. And now, here's your host, Marcelo López.
Hello everyone, I'm here today with Bill Sheriff. Bill is the chairman of enCore Energy, an exploration uranium company which owns assets in the US and only in the US. Just a full disclosure before we start our conversation. I own shares of enCore Energy and some accounts I manage also own shares of enCore. Having said that, this should not be taken as an investment recommendation at all. Now, disclosure out of the way, let's do it. Bill, thank you for coming to this program. It's a pleasure to speak to you again.
Thank you, Marcelo. Appreciate you having me.
Could you please tell us a little bit about enCore? Because I believe it's not well known to many investors. And the thing that grabbed my attention, apart from management's track record, is that management does not get paid in cash, right?
That's correct. At this point, we have not. For many years, we've gone into more or less a holding and survival mode, so as to preserve shareholder equity and our assets. We've had a bit of a contrarian view to the sector that we're immersed in uranium, and over the last 7 or 8 years that we've been in business, there have been a number of false starts. Optimism has raised its head several times since Fukushima, but when Fukushima came out, we actually took the unprecedented step of sending out a chairman's letter that I authored telling people we thought that the market was essentially dead for uranium for at least 5 years and perhaps a bit longer. We weren't very popular for putting that out, but we were firmly believing what we said. And to that end, we went into a great deal of us taking steps of austerity so we could preserve the assets. So it's been some time since anyone's received anything other than expenses. And we've been able to continue to slowly increase our asset base by looking for distressed assets during that time period. So, we're now having a much more constructive view on the price of uranium, and the company is becoming a bit more active. But, due to our low profile over the last 7 or 8 years, you're right. Not too many people know about us.
So, Bill, you were a geologist, but also worked as a broker and market maker. More impressive is that you founded a company called Energy Metals a few years ago, which had a market cap of just over $1 million, and sold it a few years later for $1.5 billion. Could you please tell us what happened?
Well, yeah, that was certainly heady times, and enjoyed the experience and learned quite a lot about the sector. I spent most of my career in the gold sector, although I'd always had a keen interest in uranium. In the mid-1980s, I had purchased the Union Carbide Worldwide Exploration Database, and for those not familiar, Union Carbide was one of the world's leaders in uranium production for years. When they ceased operations, I was able to acquire their enormous database, over 600 filing cabinets, about 100 map files, just chocked full of data that they'd built up over a course of about 70 years of operation. So it was really a treasure chest. And within that got me started on uranium, and I started, there was a boom that turned to a blip in 1986. And I'd gone out and staked a half a dozen uranium resources, proven resources in the U.S., or at least established resources is probably a better term. At least them out, but as we all know, that little market move didn't last long, and it went into hibernation for quite some time. And got together with a gentleman, Paul Matisik, who was a co-founder of Energy Metals, and in 2004. We saw, I recognized what was, I thought, capitulation by the major uranium companies in the United States. The price of uranium had just recently touched $7, and it had rallied all the way back to 9 or 10. But in late 2004, well, at the end of 2003, the major companies, Cameco, U.S. Energy, several others in the U.S. actually took the unprecedented step of writing off certain assets at the end of the year. Just a bit of a footnote, in the U.S. claims that mineral claims are valid through the end of August every year if you pay your fees or do your work at the time. The calendar years doesn't affect the claims. It's actually the September 1st to August 31st timeframe. So in essence, for you to abandon your claims at the end of December, you've really got to be very pessimistic, and you've got to be looking for a tax write-off because you've got another 8 months of essentially free ownership on those mineral rights without having to to do anything. And it struck me as odd that things that had been in the Cameco annual report the year before as stated resources that the world's leader in uranium was touting as assets, they'd essentially thrown away. And I just recognized that as absolute capitulation. And so I abandoned the gold fields of Nevada and spent the next 7 or 8 months doing nothing but staking every uranium resource I could find. And with the database I had and with a lot of late nights searching aerial photos and whatnot, I was able to amass quite a holding of previously known and identified uranium deposits. Sold those or vended those into a company that Clan Resources that later became Energy Metals, was renamed Energy Metals. Timing was everything. We hit the wave or the peak of being the first to market, the first to finance, the first to everything. And obviously enjoyed that meteoric rise in the uranium price out of the capitulation of late 03, where we had 27 or 28 months of straight up in the uranium, going from essentially nothing to over $150 a pound. And that sort of phenomenal price rise is usually reserved for high-tech companies, but we certainly we're the beneficiaries of that. I put together over the course of that 30 months in the history of the U.S. the largest single company-held resource base that had ever been assembled in uranium. We had, including historical resources, something near 300 million pounds. Fast forward that to, it was a great experience, and I think we were working 20 hours a day, and a lot younger then, but it was exciting times. And when the times come, it's time to work. So we'd had plenty of time waiting. Put together an awesome team. I've always maintained that uranium is not a scarce commodity. After all, it's the 8th most common element in the world. And it's not a matter of finding deposits as much as it's a matter of finding people. And that goes back to, our core foundation at enCore is, I think we've got, if not the best team, certainly the best team for a smaller company. Got a world-class group here between our directors, our advisors, and our consultants. We've got all of the aspects of the fuel cycle covered. And I think that's a good segue into, what I view as maybe the lacking of most uranium companies is the lack of an understanding of the fuel cycle. It's not just uranium. This goes back to our keying on the prices. I mentioned earlier, we'd had a couple of head fakes in the price of uranium. People get bowled up over the last 7 or 8 years every time the price of yellowcake would bounce a little bit. But one of the key indicators we watch was the SWU price. The simple fact of the matter is that there are trade-offs. You don't have to buy yellowcake to run a nuclear power plant. There are multifaceted aspects of the fuel cycle, and unless you look at all of them as a whole, it's very difficult to really have any, confidence in a price move in yellowcake itself. And so that's one of the things we look at. We've got experts in, the exploration for uranium, the development, the production. Dennis Stover, our CEO, holds patents on the ISR process still, and was one of the co-founders of it. Built the enCore mine in Kazakhstan for Cameco, and put together a number of ISR projects in the U.S. over his career. From then, we've got marketing. You've got to market your yellowcake. Richard Cherry, also with us, was with General Atomics for years, running that company and running the Cotter company, actually, which was part of General Atomics. He actually handled some of our contract sales and negotiations for Energy Metals prior to selling out to Uranium One. We've got Mark Paliza that's been involved with the ISR process from the old Uranium Resources, now called Westwater, and also in the permitting end, he's handled an awful lot of the nuclear regulatory permitting aspects, and is a key integral part of our team in that regard, as well as reclamation. And then reclamation, of course, leads into Joe Harrington, who has, won awards, federal and state awards for cleaning up all sorts of mining-related problems, including uranium pit lake at the Sweetwater facility in Wyoming. So we've pretty much got it all from discovery to closing the mine after many years of profitable production. In terms of a business plan, we've got key individuals that are exposed to and experts in each part of that, and also the conversion and enrichment of the fuel prior to fabrication into fuel rods. So I think it puts us in a really unique position. I also mentioned Doug Underhill, who's our chief geologist, who's spent many years working for the International Atomic Energy Association, recognized world expert on the geology of uranium deposits. Recently added Gene Spearing, who's a breccia pipe expert, also spent many years in uranium, but really keyed in on discovery and identification of breccia pipes through remote sensing. Been quite successful. Rounding out our board, we've got Nate Tewalt, who was founder of Standard Uranium, one of the early companies that we merged with at Energy Metals, and who brought us the Hobson plant back at that time. And then we've got Bill Harris, who was our audit committee chairman, used to run Fortune 500 companies, and we brought him along with Energy Metals to answer the Sarbanes-Oxley requirements of listing on the New York Stock Exchange, which we were fortunate enough to do prior to being acquired by Uranium One. So it's really an all-star team for, especially for such a small company. I think I say I'd put us up against much larger companies and feel quite confident in our team.
For sure. And what are the advantages of being in the U.S.?
Well, I think, the key one, the most glaring advantage is the U.S. is by far and away the world's largest consumer of uranium. Consume roughly a fifth of the world's uranium and produce virtually none. And historically been a large producer, but due to a number of factors, commencing with 3 Mile Island many years ago, you've seen the decline of the uranium production in the U.S. It's now probably at the lowest level it's been at in decades. We see that as a real opportunity. Uranium obviously is a sensitive commodity due to some of the less peaceful uses for it. Certain countries won't export it. It's certainly something that, being the world's largest consumer of, we think that it's very important to have a domestic production base for such a sensitive commodity. As such, we were supporters and still are supporters of the recent 232 petition that was launched by a couple of our competitor companies, Energy Fuels and UR Energy, whereby they petitioned the U.S. government to establish a certain percentage of U.S. produced uranium for consumption by the U.S. market. We think that's really key to maintaining a healthy industry, quite frankly, for nuclear power as well as uranium mining and all the processing in between.
Okay. It's good that you mentioned Section 232 because it's a very important issue for investors. I know it's a difficult call to make, but do you have any expectations?
It's funny. As much of an expert board as we have and group of people inside the company, if you were to poll us, I think you'd probably have no two people agree on what percentage chance they would give it for success. I'm probably the most bearish on the board. I give it about 25% chance that we'll see meaningful, substantial action by the president. It's sitting on his desk. He has the choice to do something with it shortly or not. It could linger. It could expire. Politically, it seems to be that it's a lot easier to do nothing than to do something, although our current president seems to not let that bother him and jumps right in. And I think that's one thing we have going for us is, Trump has certainly indicated a certain level of protectionism and I think a keen awareness of national security interest, which uranium clearly would fall under, and in fact has been identified as a critical metal under his administration. So those are the things that are going good for it. The thing that's going bad for it, in my view, is the nuclear power industry. The consumers are adamantly against it. And, of course, they write a heck of a lot bigger check than the mining industry does to the politicians. So, we'll see. We also have guys that know more about it than I do that think there's, better than 90% chance something positive will come, substantially positive. And I think, for shareholders, it's keen to realize that for us, it doesn't really make much difference either way. Certainly if we get everything we're asking for and, it's Christmas morning and 232 comes and, it'll be an overnight windfall for the domestic uranium industry. And, we'll certainly be happy to participate in that outcome. And I think we're well positioned to participate in that outcome. However, if it doesn't, we're still quite constructive on uranium prices. If you look out another 18 months, 12 months, 24 months, pick your number, but sometime in the near term on a worldwide basis. And, we just think that price estimates that are out there are not the same ones that we enjoy internally. And we think there's been a certain amount of underreporting or under-acknowledgement of consumption and perhaps an overestimation of production. And we see that the prices we feel are going to improve, quite nicely, once you look out somewhere in that 18 to 24 month period. So if that were the case, our company's cashed up. We think that if 232 does not see any help from the government, I think there's going to be some assets come available for sale in the U.S. market in particular for very, very reasonable prices. And so, we stand ready and positioned to benefit from that in the event 232 does not provide some immediate relief, I think it'll be a real opportunity for the company to further expand its already significant uranium resources and be even better positioned for the ultimate global rise in prices that we see coming.
Brilliant. So basically there's no bad outcome. And what are your views on the uranium market at the moment?
Well, here again, I know there are some of those that think we're on the doorstep of an immediate and substantial price rise. I personally don't share that view, and I think our board's a little more united on that view at this point. I wouldn't be surprised to see it firm up a bit. SWU prices have firmed and quit going down, which is a good sign. So I think we've seen the lows in the market. I don't think we're going to see any sort of significant price rise. I mean, it's going to take a move to $45, $50. In fact, let's just use 50. It's going to take a move to $50 to get a whole lot of interest in new production. And some people have said 60. So I still think we're, a couple of years away from that, maybe 18 months.
Okay, so let's say that the uranium prices do reach $40 or $50 a pound soon. What do you see happening in the markets? Do you think Cameco will restart McArthur River? Are more projects going to be brought online, some in Kazakhstan or elsewhere?
Well, the Kazakhstan issue is an interesting one, and we'll see what happens over there. But they stopped putting as much money into well field development, which inevitably in ISR situations will result in a decline in your production. How significant that is, we'll see. It's not the most transparent situation in the world, but I think it's perhaps they've seen their heyday. They'll still be a huge, the 800-pound gorilla in the room, if you will. They'll still be a huge producer. But, I don't think we're going to see the time where they can just turn the taps on and increase substantially their production. As to Cameco, I suspect if we saw 50, I'm pretty sure if we saw $50, they'd start, moving McArthur River back. But that's not a flip of the switch operation either. You've got fabulous grades of Athabasca Basin, but you've also got the equally fabulous or of similar size problems of operating up there. And number one is, an ocean of water underground that they've got to keep out of their workings. And it's not an inexpensive proposition. In fact, it's not inexpensive just to keep it on standby. You certainly just don't restart the operation. So I think they'd have to have some, in addition to seeing a price, I think they'd have to have some internal predictions of stability of a stable higher price before they made that move. You've got Ranger in Australia that's, essentially on its last legs. It's all but done. So I think there's several significant supply constraints I see either coming to the market or staying with the market. Even if we get the 232 relief in the U.S., you can't just, say they go to several million pounds a year on a quota or even 8 million pounds, which, would be ideal. You just can't ramp up overnight to that. That's going to take several years to get there. I just don't see the market being flooded by supplies from McArthur or Kazakhstan. And certainly I think Cameco will ease back into production such that they wouldn't crush the market.
Interesting. And you and your team talk a lot to people in the sector. Can you tell us the level of sentiment that utilities, producers, and traders have at the moment?
Here again, I think it's a mixed bag. You could probably put everybody in the industry into a small room, a small meeting room. It's a pretty small club. The utility producers of the electric producers, the utilities, our consumers have become quite comfortable and I guess relaxed in their ability to fill quickly on spot, and so I think their inventory in terms of years ahead that they contract has tended to go down a bit. Maybe they've become a bit too comfortable with the pricing. Some of them were probably burnt during the 04-07 rally, but they react as a herd generally anyway, and no one wants to be the first to jump out there with a price changing move. And so I think there's perhaps false comfort there, which I think will help us again when we do see the move come. But there's no hurry. There's no stampede for the signing of contracts. But once it starts in earnest, I think you may see a touch of that. We're optimistic that we don't see the same kind of rise we had in 04-07. That sort of meteoric rise is not sustainable as we saw. We'd like to see a more controlled, more prolonged, cycle where that we've got 10 to 15 years of steadily increasing prices and a healthy industry where, new mines can be developed. And quite frankly, that was one of the problems in the 04-07 boom is, there was outside of Energy, there were very few new mines that came on. The cycle didn't last long enough for the capital to come in and actually develop mines. It was one of the things we had several of them moving forward at Energy Metals, and Uranium One has continued working on them, and some of them are permitted now, ready to go, but the market's not ready for them to go. So it'd be a much healthier market to see a gentler, more prolonged market. We can reach those lofty levels. Let's just take a little bit longer to do it this time, so we've got a more sustainable market. But traders, I don't have a good feel for traders, and the uranium guys and exploration and mining side, I honestly don't know what they feel on a global basis. But the ones I talked to in the U.S., I think are perhaps a bit over-optimistic on 232. But this goes back to the argument we started with: is what's President Trump going to do on 232? And it's really anybody's guess, I guess. But I view the market as very cautious, sitting on the fence. They were, I think, falsely expecting an answer back in April when the petition was filed. The deadline came in to put on his desk, not realizing that he had 60 days or even longer if he extends it to review the petition. So I think the market's cooled off and everyone's just sitting and watching. I think that the market will probably have a pretty good reaction regardless of the action taken on 232, just to get the issue resolved. But in terms of the uranium company execs, it's the guesses are, I think, probably a little optimistic in my view.
Okay. So you and I talk about SWU prices a lot, and we know it's an important issue for uranium investors. Could you please explain to our listeners what is SWU and why is this so important?
Well, it's a separative work unit. It's the three-letter acronym for separative work unit, and it essentially is when you're processing uranium ore and you're removing the fissionable isotope, it's a matter of how much energy you put into the separation process as to how much of that fissionable U-235 you actually get out of the ore. And if you put more energy in, you can get more out. And the less energy you put in, the less you're getting out, but obviously the energy is a cost. It's a huge cost factor. And if the price of yellow cake is higher, then people will pay more to put more energy in to get a higher percentage recovery, if you will, out of the raw ore. If prices are low, then they'll go through a lot more of the ore, resulting in higher tails. And by higher tails, what they mean is that the already processed ore has, or yellow cake, has got a higher percentage of the U-235 in it than if they put in more energy and recovered more of it. This not only is an immediate factor, but if you have a large inventory, and this became a factor in 06, 07, if you have a large inventory of tails that were only, say, moderately processed, resulting in high tail grades, and those tails can actually be reprocessed later as a source of uranium without buying fresh yellow cake. And they've also had a lot of use in using those tails for downblending weapons grade, but that's a whole nother story.
Sure. So moving on to enCore, are your targets in Arizona affected by restrictions around the Grand Canyon?
They are.
Yeah, because there are rumors that President Trump is going to lift, or at least partially lift, the Arizona Strip mining ban. Can you comment on it?
I can. I think that first off, if he does lift the ban, we've been actively, one of the few things we've spent money on over the last 2 or 3 years is we've been actively lobbying in Washington for the partial lifting of the ban. Now, the ban basically encompasses essentially everything south of Utah to the interstate highway that is south of the Grand Canyon. So it's not really mining in the Grand Canyon. Obviously, the Grand Canyon is protected by a national park, which already bans uranium mining. So there's a lot of misinformation out there and incorrect semantics, which, exacerbate the problem because it creates public hysteria when you think, they're going to mine uranium in the Grand Canyon. Well, quite frankly, I would be against that, but that's not even possible. So it's a bit of smoke and mirrors in that regard. What is affected, though, is on the north side, you've got the eastern third of it is in national forest. On the south side, it's mixed-use land, some of it forest, some of it BLM. And then on the northwest side, which is where most of our holdings are, it's almost all BLM land. We don't see much chance of the ban getting lifted south of the Grand Canyon, although we're in favor of it, largely because that's where most of the tourists are, that's where most of the public perception and awareness is. Similarly, on the north, the part that's in the national forest, probably less of an opportunity, but the northwest portion where we've got our holdings concentrated, we think there's a much better chance of having it lifted just because it affects fewer and fewer people, and it's further away from the areas of concern. So we're fortunate in that regard. some of our holdings, we've got, I think, 12 to 15 projects that are bonded and permitted, although in a holding pattern because of the ban the Secretary imposed several years back. So we'd be very positively impacted. We'd picked up the Metamin, which were the former Quatera holdings there, and this is where Gene Spearing comes involved as our advisor. He and the Quatera team developed some very advanced methods utilizing geophysics and identifying breccia pipes, and had made huge discoveries. Some of the most recent discoveries in the U.S. Were made through these methods before the ban was imposed. So, we're right at the starting gate of a major series of discoveries there if the ban's lifted, and development of some of the resources that we have that were recently discovered. So it would help us immensely. We do have several state sections that are not affected by the ban that do have discoveries on them. And so we're actually contemplating the drilling of one of those targets this year. We think it would be good to demonstrate the viability because, quite frankly, those breccia pipes are the highest grade ore in the United States. Should we get, I think the reason that there's some speculation that Trump may lift or partially lift this ban is tied directly to 232. If there is any significant 232 relief coming or support coming for the industry, here again, this goes back to my comment that you can't immediately turn on the taps and suddenly produce 8 million pounds a year of uranium. And even then, there's a bottleneck in terms of production facilities. And, I'll be clear, we don't own any, but, we're certainly looking at how to achieve that. And, one of them is through toll milling. But the only way you can really make a big impact quickly is with some higher grade ore. So that, here again, you come circling back to the Arizona Strip and the breccia pipes, which is, the highest grade ore in the U.S. So it makes sense that if there is some 232 relief coming, that perhaps in parallel with that, you'd also see the lifting of the ban on highest grade, newest discoveries in the U.S. So they may go hand in hand, and we're optimistic in that regard. But here again, we do have some, I think, quite worthy projects that are not affected by the ban. So here again, either way we win. We certainly don't win anywhere nearly as big if the ban stays in place, but a win nonetheless, because we were able to pick that package up for very little consideration during the past few years of the doldrums in the market.
Sure. So enCore is based in the U.S. and you are based in the U.S. and so are the majority of our shareholders. Do you have any plans to do something with the over-the-counter security over there?
No, timely question. We're about halfway through the process of listing on the OTCQ QB, which will transform into the QX at the right market cap and price level. But by listing on the OTCB, we were able to provide that blue sky coverage in the U.S. marketplace to our U.S. investors so that they won't have to go through the TSXV exchange.
What's enCore's relationship with Energy Fuels?
Well, Energy Fuels is our largest, one of our largest shareholders. They aren't our largest shareholder, but they're a significant shareholder. We maintain good relations with them, certainly talk to them about toll milling. And I think one of the keys here is they do have excess capacity for toll milling, made that quite clear to us. And it seems logical that they'd have a bit of favoritism towards a company that they have a big shareholding in. At the same time, they aren't going to hold capacity back waiting on us. So we have to be prepared to move and move quickly, which we are. A lot of it will be the first ones that can get to their gate with, a steady, reliable source of ore. And certainly some preference will be given towards grade, I would think. But we think we're in good position and we enjoy having them as a significant shareholder.
Brilliant. And what are the new developments in the uranium space? New kinds of technology, fuels, etc.
My favorite is, obviously the biggest issue in my opinion, of nuclear energy is the fear of the unknown and the fear of the meltdown and the fear of Fukushima, et cetera. And granted, there have been some issues with that, and certainly it wasn't a good experience by any means. But I think, one of the most promising new advances, and there's several of them, but the one that I'm really keen on is actually a company with our same name, enCore Fuel Rods, which is part of the old Westinghouse group. And they've actually invented a system that is meltdown proof. That is, the water pumps can fail, the thing can dry out, and it will not melt down. I think that's perhaps perhaps in terms of public acceptance, widespread acceptance of nuclear power plants, having one, in the town you live in. If they were 100% certain that thing couldn't melt down, they wouldn't worry about it. I think that is perhaps the most revolutionary advancement that's coming. And, it's in commercial testing this year. And essentially it's, one of those things where it's not rocket science. It just takes a little bit more time and effort to make the rods, the fuel rods, because they're basically, instead of a typical fuel rod is a long pencil of enriched uranium-235 in a rod that's encased in a metal zirconium alloyed tube. And the chain reaction of the uranium, or the fissioning of the uranium, occurs in all directions, but it's limited in an outward direction by the zirconium, which absorbs some of the radiation. But the reaction's allowed to go on freely in between, up and down the core of this, if you will. And the new fuel rod designs, I'm trying to say this fairly simplistically, but the new fuel rod design actually compartmentalizes and has segments of much smaller, perhaps an inch long segment of the fuel rod that's got the same metal cladding in between. And they're using new and more advanced alloys that limit absorb the heat better and limit the meltdown potential. And they're experimenting with even further additional alloys for the next generation. But it's quite a promising technology. You can, any of the listeners that have an interest can go and just Google enCore fuel rods or Westinghouse fuel rods, and I suspect they'll come up with lots of information on it. But I find that very promising.
Brilliant. Phil, you mentioned in the beginning that when Fukushima happened, you alerted everyone that the market would be dead for the next 5 years at least. It was a great call and one that again set you apart from the rest of the crowd. So in your opinion, what would be the biggest risk for investors in the uranium space right now?
Time. I think timing is the enemy of investors in all markets, really, but maybe more so in uranium because, it is impossible to predict the exact timing of when this is going to happen. And, if you're right within a year, then that may be adequate, but for some companies, that year may be more than they can finance. If the move that I talk about in uranium comes in 3 or 4 years instead of 2 years, then investor fatigue will grow in. These companies can't afford to finance themselves, et cetera, et cetera. I think the biggest thing that you don't know is the timing. And while we've, certainly got very, very talented and experienced people, and, there's a lot behind, it's more than a guess when we think the uranium price is going to change, but there is no way of pinpointing exactly when or exactly how much it's going to change when it changes. And I think that's probably the biggest risk because the uranium's there, the personnel are there, the extraction means are there, everything you need is there except the price. And so while we know that ultimately it's going to go up, that's the biggest single factor. I guess that's why I feel for the first time in years comfortable in saying that, we can see the light at the end of the tunnel and it's not a train. I think we're there. And that's one of the things we've done with enCore is make sure that we've got, in fact, we just did a raise here not too long ago, which gives us the runway to make sure we're in business long enough to enjoy what we view as an inevitable price rise. I think it's going to come sooner than later this time. So it was a little difficult to take the money this time, but our view is to be better safe than sorry. And also to be cashed up in the event that there are any distressed asset sales that come along. We always look at everything we can see, whether it's apparently too big for a company our size or not. It doesn't mean that we won't take a look at it and maybe try to get either a piece of it or partner up with somebody. But we pretty much built Energy Metals on mergers and acquisitions in addition to, large efforts of claim staking and acquisitions of our own properties. And, to a large degree, we're following the same recipe here. I think the one key is to really prevail in a long-term uranium cycle, and to prosper, you have to gain a certain size and, pardon the pun, but critical mass. You have to have critical mass. The generic growth alone is very difficult to achieve that. And that's why, we've made, while fairly small, we've made a couple of mergers along the way with enCore so far. And I think, we'd be certainly looking to do more of that going down the road.
Great. That's great. Bill, once again, many thanks for coming to this program and sharing your insights with us. It's always a pleasure to talk to you.
No, thanks, Marcelo. I really appreciate it.
If you like this podcast, feel free to forward it to your friends and colleagues. We appreciate your time, support and your feedback. You can follow Marcelo Lopez on Twitter at MALopez1975. The information presented here is not investment advice and should not be taken as such. You should do your own due diligence and consult with your financial advisor before doing anything suggested or mentioned in this podcast. L2 Capital and its partners will not be liable for any losses that occur in doing whatever is discussed in this podcast.